What's going on, guys? Michael here, 360 Digital Closing Bell Week Ahead podcast here on this absolutely chilly Monday, October 27th, coming to you from an undisclosed location here in Denver, Colorado. As always, as mentioned, I'm your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How's the weekend, man?
It was absolutely beautiful. Got to work on my shop. Got to see my great nephews. Got to see my son. Beautiful weekend. I am ready for work.
Yeah, I'm ready for it. I sat on my butt all weekend and watched sports. We had World Series Friday, Saturday. Friday, Saturday, and Sunday. We had football all day Sunday. I got to watch the Rays come back and win on Saturday. Woohoo! And then we had to unfortunately watch the Dodgers lose for all you baseball fans, 3-2. Unfortunately, Game 6 will be played tomorrow. So I'm not a Dodgers guy, and I'm mostly cheering against them and not really for the Rays. So if you guys are keeping track at home. Not the biggest Dodgers guy out there, but we have a great show for you lined up. There's honestly so much stuff to digest here. I'm not even sure where to begin. We'll obviously cover everything that happened with our two E&P consolidation deals, mergers over the weekend. MidCon Energy agreeing to sell itself to Contango Oil and Gas. Actually, just this morning that dropped. At about here in about 30 minutes, we'll be able to sit in on that management meeting. We also have Synovus Energy buying Husky. I've got some very interesting thoughts on that. Called up a friend of mine, maybe to get some information. Stu's got just some crazy amount of stuff with the international news, but we're going to start the show covering the levels for oil and gas. And the outlook for the week. But before we do that, guys, the show is brought to us by the world's greatest website, oilandgas360.com, the best place for all of your energy news, energy finance news, staying up to date on where some of the, just kind of the trends of what's going on in the oil and gas industry. I always talk about waves and how do you catch the wave of changes from an investment standpoint so you're always profitable? How do you catch the wave, the business cycle wave, so that you're always on the best business practice and always ahead of the curve? You can do that by just going to oilandgas360.com 47,000 times a day. I promise you, every time you go there, you're going to learn something. We check out the 360 news desk, which you can find on the homepage right there. It's a news desk that you can also find in the show notes. I specifically curate every single day to make sure that if you're in the upstream, if you're an engineer, if you're an analyst, if you're anybody that just wants to know what's going on in the oil and gas business specific to the U.S. and Canadian markets, guys, go to the news desk. We also throw international stuff in there because really what that is what's moving markets. Markets are impacted by internationals. They're impacted by U.S. consolidation news, all this stuff that we'll cover here. But check it out. oilandgas360.com. Stu also has a podcast on that website called the Energy 360 Podcast, where he's interviewed a bunch of great thought leadership. We've kind of went through a little, first off, we've just putting out a lot more content. We've been going through a little low, but we have a wild week lined up for recordings, don't we?
Oh, absolutely. We have Data Gumbo today with their fantastic case study.
Love those guys.
Oh, we love Data Gumbo. They are fabulous people. We also have the CEO, the brand new Paul, CEO of Ring Energy tomorrow. And we also have some folks from Microsoft on Friday. And I have about
theoretically,
they have bounced in and out yet, but
yeah, I'm not convinced that'll take place on Friday, but we'll see. I'm excited for this Ring Energy interview. Are you ready for that, Stu? That's all you, my man. That's a one-on-one you got.
Oh, absolutely.
You got to put the tie on for this one.
Oh, absolutely. And use my cabin in the mountains background.
Yeah. Oh, yeah. Your Vale estate.
Hey, you got to do.
Yeah. Anything else besides that? Do we have anything else coming up?
Yes, we have Women in Energy coming up.
Yes, Susan this week.
Yeah. Then we have visiting with Heidi and our other Canadian brethren. And I have some fellows. Not just fellows as in fellows. I have some really big industry leaders coming around. And soon as I get their commitment, I will start broadcasting that.
Yeah, so once we get them on the books, we'll let you guys know. Check that out. Energy 360 by Entercom, available on iTunes, Spotify, wherever you get your podcasts. All right, I think it's enough of the clerical work. I want to make sure I start the show covering levels. I know we kind of do that at the end, and to be honest, as Stu mentioned, people tune into the show for the levels, not my ramblings on just the events. You can hear that every day live on YouTube. Entercom, Oil and Gas 360. Subscribe. Just Google Oil and Gas 360 on YouTube. Just Google it on YouTube. I just said that. Yes. But we'll start with the levels here. Overnight weakness. I mean, we're currently trading 38.86. If you listen to our show on Friday when we recorded it, oil was probably $40 right there. That's actually where the point of control was for that whole day. Was trading right there around the 40. But as Stu will talk about in the international news desk here coming up, Libya finally turning on their El Jefe. I don't know if it's their El Jefe field. I don't think that's how it's pronounced because that's Hispanic, but I think it's like JEEF or something like that. Point is, that's another 70,000 barrels that was supposed to come on Friday. Now came on basically right before the futures market opened this weekend. Interesting. And it really sets their path towards 1 million barrels output, which is, again, the demand, while it's coming back. I saw a quote this weekend from OPEC, from Saudi Arabia CEO who said, Saudi Aramco CEO said he sees oil demand having come back. Has it though? I mean, it has. It's a little bit. I mean, it's bounced back. We were never going to be as low as it was, but has it really? We haven't added, and we're still, that's still a 7-8 million barrel a day glut. So now if we're going to add another, Libya's turned on about 500,000. If there's another 500,000 barrels from Libya coming back on the market, I mean, it's a weak market to begin with. And this $40 level that we're at is a precarious level because it's enough for companies to operate, but it's not enough to grow, which growing and we're worried about jobs at this point. Like, when are these jobs coming back? Because the outlook doesn't look good. We're going to cover the Synovus Husky merger, 1.2 billion in synergies. Well, that's all G&A. Like, there's 600 million of that's G&A. That's jobs. That's a lot of jobs, unfortunately. So we get much below $40. Companies not only won't probably have the ability to merge as often. I mean, I kind of swung and missed on my whole merger contra tax, which is fine. I'm glad this is happening. But my point is, we get much below, more this oil continues to come back on the market. We don't find OPEC doesn't control itself. We're at the point where this is going to impact the U.S. shale. I mean, companies aren't going to be able to merge, and they're going to be laying people off. So that's why some of this, this OPEC news that we cover pretty often. I mean, we might sound like we're beating a dead horse here, but man, you can see it right now. Futures are down 2.5 percentage points off their closing prices from Friday. I mean, what? That's just, it's not because Husky and it's not because Contango just bought MCP. Maybe it is. Maybe that's what it is. Maybe investors just hate.
But I listened to our show on Friday because we talked about Libya.
Yeah, exactly. Yeah. So, do I think, because right now I said oil's trading at, 38.83, all the levels that we've been working with have been to the upside. I mean, I think 39.15, as you can see, that was actually the point. We have that level on the charts, actually the point of control currently for the day. So yeah, I mean, there's maybe a little bit of a bullish sentiment here. I think if you're long, I think a good place to get long. I think there's a couple places to get, if you're bullish, I think there's a couple places to get long. I think, 35.42, 36.18, 37.42. Those are really large levels that if we see decreases and you're interested in getting and turning around and getting long, I like those levels. If you're still short this market, but you get 38.72, 39.15, good levels. Like I said, 39.15 is just about the point of control for today, which means, might be a little sticky, but I mean, we're in the midst of a fall right now. We're in the midst of a retracement down to 32.72 or 38.72 as we speak. I don't know, Stu. I always do this. I go bearish, and then this market flips around all week and goes completely bullish. So structurally, this doesn't look good. Structurally, from Wednesday, if you just kind of go look at it, we have volumes just on the down. The point of control show a bearish sentiment from Wednesday leading all the way into today. And that's one of the easiest ways to do. Plot daily volume, volume, go to a price action chart, do what's called session volume, which basically gives you the volume, the trading volume of each session at each level, and just watch the point of controls fall. And that's a great way to talk about bearish. Where's the volume? The volume is falling to lower price levels, the maximum volume being traded. And right now we're down at 39.15. Wednesday it was $41. Went to 44, went to 40.64 on Thursday, Friday. Overnights, not even that. On Thursday it was 40.62. On Friday it went down to $40 even. Now we're at 39.15. It doesn't look well. It doesn't look good. Now, again, all it takes is one news event, one good report on, hey, people are starting to get out and about from COVID-19. Some of the cases are going down in the hotspots around the world. We're starting to open back up. This market turns around. We could see $45 quickly. I mean, that's the delicacy of giving away levels trades. But you have to, if you're going to trade this market, it has to be on a hyperactive day trade level. You try to swing trade this, you're going to eat yourself in the shorts, because you're going to have, you're sitting in, you can't really swing trade news-driven news items. You can swing trade crude oil in the long term. And I'm talking like USO, get in on some United States oil fund. That's different. But if you're just going to start buying contracts, I'm going to hold them for 2 weeks. Oh, Stu, I've traded crude oil options. Not fun. Not fun. It is a headache and a half. Great leverage, headache and a half.
Yeah, especially with Twitter.
Well, yeah, and the ability for the President of the United States to just, hey, one tweet. Bang! I've been on both sides of it. Not fun. On the natural gas side, finally, perma bulls. You'll love this. I don't want to say there's strength in the natural gas markets, but I mean, when you look at, over the past, 6 days here, we've, point of controls show a bullish sentiment. We're above $3 now. I saw a great meme on Twitter of someone saying natural gas is $3. I'll have to repost it to the Oil and Gas 360 Twitter. It was pretty funny. When I look at natural gas, I tend to look at it a couple ways. One, we in the intermediate term, obviously we see a hurricane coming in. It's currently a tropical storm. Was it Zeta? I forget what it is. Beta, something like that. It's supposed to be a tropical storm. They don't think it's going to impact much. We have seen some rigs getting evacuated, but no production rigs. Right now, these are just drilling rigs. So no rigs that are there's been no shut-in operations shut-in production as of, this morning. And that could change today. That, I think, is obviously an intermediate term. I think when we look at the intermediate weather outlook, should be a little warmer as we move that 15-day outlook. American European data sets have really kind of trimmed some of that demand back. Really depending on what you look at, depending on what service you subscribe to, it looks like specifically, after this cold front moves off in the short term from the Midwest, it's going to warm up a little bit. So you need that back into the curve. And if you look at the 2-month contract, they're up nice. That curve is starting to kind of curve itself out a little bit, because we're starting to see the normal weather patterns coming. In the short term, bullish sentiment right now, we're saying it's cold right now. And what I'm saying, I've got a hoodie. I got long sleeves, sweats. So the Midwest, through the year in Colorado, it's cold. It's like 6 degrees outside. So that's going to really push up natural gas prices, specifically in the short term. The spreads that we're going to see on Henry Hub at the different clearing points is going to be very interesting in terms of our crack spread. So I'd be careful to watch that. I know trading houses were probably busy over the weekend, making sure they could line themselves up for some good crack spreads over the day, over this week. Looks like even West Texas is going to get hit a little bit with some stuff. So, I mean, seriously, it's going to get cold in the short term, but that medium term is going to turn around a little bit. I mean, it still is only late October, turn November. So, we're still seeing some go through, hedge funds have also turned bullish on natural gas, which is interesting. Hedge funds notoriously are short natural gas because that's just where the market has been. As we know, hedge funds are generally long crude oil just because it's easier. Hedge funds are generally short natural gas because they're it's kind of a great counterbalance trade. but they're beginning to unwind those books a little bit. And we've actually seen in the commitment of traders recently that number occasionally swip positive, more bullish. So, there is ups, everyone is seeing the upside. I was kind of, I'm kind of the only one tamping the brakes a little bit, but even I'm starting to come around a little bit. I mean, there's only so much data I can ingest before changing my mind, Stu. I'd make a terrible politician because they'd ask me, why'd you change your mind? I don't know. I learned. I observed and learned and changed.
Or there's a lot of voters. Number one trending thing on Google is how do I change my vote?
Yeah, you saw that. You told me that this morning. That's funny. So
some things are just funny.
So I'm gonna say I'm gonna go. I'll put my stake in the claims too. I'm gonna go bullish on oil. I don't think I see us crashing 37, 38 bucks or like 37, 36 bucks. I think what this is gonna do is we're gonna turn around. I think what happens is we're gonna see some stimulus this week. It's my guess. Whether it's something, something's gonna happen. On that stimulus note, I think we're going to see. I would be bullish. I would be trying to get in, not long, but my guess is, Friday when we record this show, is oil going to be above or below 38, 39 bucks? I think it's going to be above. Now, is it how much, how little? Who knows? On the natural gas side, again, I think we're going to break through this top. As we mentioned, our high right now is 305. We hit that on Thursday, and we saw a retracement back to a really key level at like 302, and now we're working our way back up. Remember, these guys trade in natural gas trades $3, 2 cents, and 3/10, and each tick is a tenth before you actually get a penny move. So a 2 penny move is 20 ticks. 20 ticks, that's some moolah right there. So that just gives you an idea of how this, only 4 cents away. That's like 45. That's like 40 ticks there, buddy. So remember, it takes a little bit to get to, and it is volatile, but so when we get up to that 305 level, up there, it's uncharted territory. We haven't seen above 305 in a hot minute. So again, much like when you're trading all-time highs, there's it's a little different when we hit, as we talk about, there are, when the S&P hits, the ES contract, which is the S&P 500 contract, when that hits all-time highs, generally you see a 10% run and then a retracement. It's generally when you go back and study all-time high hits, and that's how the algos trade. So you might as well just, who cares if it's right or wrong? It's just what they're doing. So I don't know. That analysis does not hold true for something like crude oil, natural gas, because they're just completely different markets. So again, when I say, when we hit all-time highs, don't think, we're just going to see a 10% increase and we'll play the retracement. No. This is not the stock market. This is the commodities market. So I like to point that out. But on natural gas, I'm going to go bullish. I'm on the upside on natural gas a lot more than I am on crude oil. I'm reluctantly bullish on crude oil only because I do think $40 is probably where this market's just going to hang out for a while. And I think this Libyan news, while depressing, I think will kind of fade into the distance here as hopefully a stimulus deal comes in. And then obviously, I think once we get past the election, we're going to have a lot more clarity in the markets and people are going to know. I mean, I saw a very interesting graph. This is correlation, does not mean causation. It's the first thing we learn when you study economics. Just because two things are true doesn't mean they're because of each other. But if you overlay oil prices, and you don't even have to do who the president is, just do the party of who's occupying the presidency. Democrats have been very well for oil prices. Democrats have done and production growth has done very well under Democratic. This is a case to be made. There's a case to be made that maybe what the oil industry needs is a tightening, is a squeeze of the bell, and needs oil prices to, we need regulations to bring oil prices up higher. I don't know. There's a case to be made. It was interesting. I was getting deep into it, Stu. I don't want to rattle your brain a little bit.
That is interesting. You're going bullish.
Well, think about who was president from 2008 to 2016 when we saw the biggest expansion of oil and gas. Who was in charge?
I got nothing on that.
It's just interesting. I don't mean it means anything. It's just interesting.
Well,
when you think about it.
there were so many other things in play.
Exactly. That's the counterpoint is it's just one data point in a bunch of sea of 7,000, but it's just interesting.
Right.
It's just interesting.
I'm going bearish on oil this week. And
Okay. So you think, so we're going to write this. So 38. So we'll say $39 even because it's 38.91. 39. Right. You're going to say by the time we record this on Friday, we do our daily show on Friday. You think oil's going to be below $39?
Oh, I think it is. I really think we're going to go lower than that. Okay. And the reason why is some of the international stories that I've got coming up. We have the election, and there's a bunch of different arguments on the election, what's going on. I wish every politician would be voted out of office and we'd start fresh. Personal opinion. But when you take a look at all of the affecting things going on in the international space, holy smokes, it's going to be brutal.
So, yeah, it will be brutal. But I'm not being
bullish. I'm just the old pessimist.
No, you're just selling. And so if you trade, if you day trade, if you're a retail trader out there, you have to sit down before you start every trading day and say, what's my sentiment? What's just my sentiment for the day? Because you have to attack every trade from, well, I have the bias that I just think today's the day we sell. So you scope up every trade from the scope of Stu's going to do this week. I'm selling. Doesn't mean you sell every position. You can go long at some points, but it just means you have to have a bias one way or the other.
Yep.
So and you have to develop that bias. So I think we're going to be above $39, but I just think we're going to get a news-driven event. I think we're going to see stimulus happen this week. I think Trump will realize that if he can pass a stimulus, it won't hurt him in the election, and it may help him, may get him a couple more votes. I think really that's what it comes down. I don't want to be conspiracy theorists, but I really think Trump is waiting to do a deal as close to the election as possible so that it can be a news event for him and rally the last undecided vote. Well, Trump gave me another $1,200 check. Might as well vote for him. I don't want to be a conspiracy theorist, but I think that's what it's going to come down to. I think we're going to see a stimulus. I think it's going to happen Thursday, Friday. We might even see, maybe not Monday, because I think when we vote Tuesday, right? Tuesday's technically the election, right? Tuesday's the 4th, right? We vote on the 4th or the 6th. No.
I've already voted.
Well, I know, but when is technically the election? I voted too. I voted. Yay. Is it the 3rd?
Yeah.
Because it's a Tuesday, right? It's a Tuesday. I mean, I bet you Wednesday, Thursday, or Friday. I bet you. I'm guessing Wednesday, Thursday, or Friday, there's going to be some stimulus talks. And not talks, I'm talking deals. Because I think Trump's going to use it as hey, I got the stimulus done. Democrats didn't want it. I pushed it through for you guys. Whether that's true or not, I don't know. At this point, it's all politics. And Stu said, vote them all out. The best thing that can happen in this government is gridlock. I want every different branch of government to be a different party that controls it. So nothing happens. It's quite possibly the best thing that could happen at this point is just massive gridlock. All right, enough politics chat. We have a boatload of stuff on the news desk. We'll kind of go smallest to biggest. One, Contango Oil and Gas buys MidCon Energy Partners. Yuck. And I only say that because it just cracks me up. So Contango Oil and Gas, if you go to their website, they do a bunch of different things. Obviously, they produce natural gas and ticker symbol MCF. We love that. But they also, if you just go to their website, it's just hilarious. Have you actually been to their website, Stu? I don't know who runs this. But look what they say they do. So you go to About Them. So they have their operations, our strategy. Okay? They have a fee for service. They're also consultants. They have a legit, they also consulting. They also are like basically, not only do they operate wells, but they go in, and I like this, but they go in and they'll do like fractional CEO stuff. It's called fee for service. So it's interesting. I wouldn't have thought these guys would be acquirers, but it makes sense. Their CEO, former real estate guy, finally puts an end and buys the last standing master limited partnership that was left in the oil and gas space, which has been an absolute scam to investors. Anyone remember Lynn Energy? That was a master limited partnership. Oops, that didn't go good. Master limited partnerships are good for one thing, the master limited partners. If you are a shareholder, you hate it. And this final ENP MLP dies. Well, doesn't die, it gets acquired. So I think the shareholders actually make out okay on this one. Generally, the shareholders, these ENP MLPs go under, or they get sold for pennies on the dollar. This actually, while it's no premium, you're at least getting something, and at least the shareholders are getting something. Now, do I think Contango Oil and Gas is going to be around for a hot minute? No, but we'll see. That's really all I've got on that. I think, it's just, yeah, that's all we'll say. Stu, you've got stuff in the international news desk.
It was a long weekend for the news desk. There just kept stuff coming and coming. All right. Our first one coming out last week, we talked about Libya. You hinted at it at the first. They have the crescent of oil, which is on the eastern side of it. And you take a look at the new for our YouTube. Here's the article right here. They have the force majeure on El Feel. You called it El Jefe. El Jefe.
El Jefe. So it's El Feel. My bad.
In Spanish is the boss. So maybe this is the boss field, we'll call it. And it's we posted that it was coming online on the 24th. Today's the 26th, and it actually made it to the 25th.
Okay.
So now the force majeure is actually going to be produced to be 800,000 barrels per day, and it will be spun up in 1 week. And it will be 1 billion. 1 million within 4 weeks. Now, that will actually put Libya's output well over 1.3 million barrels because of the other field that came online. So using crayon math, it will be 1.3 to 1.5. That poor old OPEC and OPEC Plus, they cannot keep these guys in line. I would like to invest in the newspaper business because that's a big newspaper for smacking Libya in the nose to try to keep them in line.
Yeah, OPEC's had a terrible, and again, it's part of what the long-term bearish sentiment is. If we never see demand recover, if it really is, we're always going to have this 3, 4, 5 million barrel gap between demand and supply. A million barrels is 25% of that gap, which is woohoo.
And we have about 6. I'm going to work on the numbers here. I have all the OPEC numbers and work on that. You have about 6 countries that need cash bad. And so they're producing no matter what, no matter how much you smack them around. Okay, my next story is India. We love the Indian management. They are trying to get the lowest cost kilowatt per hour. They are looking at a $206 billion investment in oil and gas in the next 8 to 10 years. They go nuclear, they go solar, they go power, and they are really looking at oil and gas. They put in 6 LNG import terminals in the last few years. Ooh. And Prime Minister Modi is now got a conference looking for the information. So this is on our news desk. We love India. We love their leadership. We love their balanced power approach. This one came across the news desk this morning. And British Navy forces storm an oil tanker in English Channel after possible hijacking threat. They did a fast rope on this one. The operation took 9 minutes. Those special forces guys in the
In
Royal.
and out.
Oh man, they in 9 minutes. Here we go. We are going to take this oil tanker. I can't run from the one end of the oil tanker to the other end without throwing up for 9 minutes. I mean, that's Royal Marines did a great job. Great news that the initial reports confirm that the crew is safe. Stowaways were from Nigeria. Surprised, but anyway, glad that everything turned out well. Our hats off to the British Royal Navy Marines. Here we have the boiler starting up in Kuwait's CFP. There's the article there. Each capacity is 380,000 pounds per oiler in the boilers to generate the steam to operate various units at the Mina Abdullah refinery. They can be increased up to 420,000 pounds. They will be processing 800,000 barrels per day. Not a bad thing for them in downstream being able to process this. It's pretty incredible. All right, we like Kuwait, by the way. China. Back to our buddies in China. Is your head spinning going around the world yet?
I'm just waiting for cart service.
Cart
no ice. Leave the can.
Hey, if any of our listeners are out there, I need one of them little toy planes buzzing along, so that we do like.
When can I sit? We've got enough points. I got to be able to sit first class the next flight.
Oh, absolutely. Okay. This is an example of oil quota overproduction by OPEC. Chinese imports of HDPE, which is for plastics. Oh, they need plastics to go around the world, but it is made by Iran in coming around out of that, and that's in 81,000 barrels, 22,000. Anyway, this is all out of Iran for China outside of sanctions. So even though it's a finished product, so to speak, for plastics, it still has tons of oil in it that they need. Okay, moving right along. We are now into France.
Ooh.
Iraq, ding, who is another pain in OPEC's nose, is, okay, who's the number one flaring person in the world? Country. Come on, TikTok.
China? India?
Russia.
Okay.
Ding. Okay. Iraq is number 2. Okay. Look at that. Okay. That's a normal day at the field. Hey, honey, I'm going off to work in the oil field.
Yeah.
Got smoke, PE. Okay. The good news about this article, Michael, is that Iraq is in talk with France's Total to invest in flaring gas carbon capture technology. This is actually a really good news. They're trying to recapture 1.2 billion CF per day of gas that includes Texas Nasiriyah field. So this will really reduce their burning and flaring, and I think it's a fantastic move. That will also use in their energy less oil, and this may impact in the long term OPEC's ability to control them a little bit. So that was a bit of good news this morning on the news desk.
Okay, good to hear.
And actually capturing flaring.
Flaring, I mean, yeah, flaring that deserves a whole episode at one point. We can talk all things flaring. There should be no reason why we have to flare any natural gas ever.
I couldn't agree more. It is a waste of a beautiful product.
It really is. Good. I mean, yeah, a lot of stuff going on in the international side. I mean, you want to, it's whew, busy. Is that all you got?
Yes.
Are you expecting those peace deals you're talking about? What are the outlook on that?
We did have one coming
Yep,
through.
we saw
Um,
that.
and on my source, there are still another two popped up, and I think you'll see one before the election. So the peace is going around the Middle East and is pretty important. I don't know that all political parties would be able to pull that off.
Yeah. No, I agree. Well, I think really the other thing, the last thing we need, I think, covered here is the you know, Synovus Husky merger that happened on the Canadian side. And full disclosure, I'm not a Canadian E&P analyst. I know not very little. I know enough. I've heard of these companies. I know they exist. I know what they do. But this is not my area of expertise. So I had to place some calls for all of this analysis.
Oh, wait a
And
minute. Is that like that game show when you have to
I
call?
had to, I had to call a friend. I had to phone a friend.
Had to phone in a friend.
I had to phone a friend who put me in contact with a friend. So that's where we went with this. High level, the chatter that I'm getting is that this is an okay deal. Synovus definitely has better assets than Husky. So it's basically comes down to how much are you willing to degrade your upstream portfolio in order to obtain refining and midstream capacity for in this low oil price environment. So I think that's the trade-off. I like that. I think the trade-off is a decent one. When you look at the pro forma 1.2 billion in synergies with 600 million in the first 6 months, 900 million within the first year. That's, as I've been told, G&A all the way. Apparently Husky pays well. The other, big piece in here is who runs Husky. Some of the stuff that happens with Husky, as you guys know, Husky was involved to buy MEP Energy Partners in December 2018, walked away from that deal, which really ruined the credibility of them in terms of being a buyer. They basically took these guys all the way to the front line and then had to pull out. And there's a lot of things that were going on around that time, both, from an Alberta, curtailment of production standpoint. Remember, they were at that point, Alberta was thinking about controlling how much output there was. In hindsight, pretty terrible idea, but happens there. It's also some, as Stu would say, some international news stuff. If you remember, about the same time, United States asked Canada to hold Meg Wazuhan, who's the CFO of Huawei, and the owner of the largest shareholder in the Husky is a guy named Lin Kashin, or we'll call him LIK or LKI. Basically, he's worth 30 billion. He's one of the most influential people in China and Hong Kong. So, a lot of stuff that was going on around that time that kind of caused Husky to walk away and really ruined their reputation as someone who could purchase. So I think, why does they sell out for $2.8 billion? They didn't really have a choice. And, LKI is all for this deal. And, it really, Husky, if they were going to sell, they're going to attempt to sell to what they consider a low-cost operator. Synovus is that. The person who I talked to loves the assets that Synovus has, thinks they're bad, that none of the assets that Husky has really come close to that. I think this deal just comes down to this, Husky was a chip that needed to get moved away and needed to get swallowed up after this, and I think they would have gotten swooped up a lot quicker if I think prices had stayed the same. I mean, you would have probably gotten a better deal if you're a Husky shareholder, but then again, I think there's some things going on with this deal that are more of a international political than I say straight up, here's what the M&A market looks like. Now, again, the whole deal comes back to what I've been told is how much you're willing to degrade upstream assets in order to obtain midstream and downstream refining capacity. It's a deal I probably make. I've been preaching that. I've been talking about that on the show for a little bit. But again, I need to dive more into these assets. Apparently these assets are better. Who knows, Stu? You got any thoughts on this deal?
I really like the folks over at Husky. Then, so our hearts to go out to the employees as they take a look at.
Yeah, they're done. I'm sorry, guys. I hope this isn't the first time you're hearing it, but it's not going to look good.
No, and good people up there. We love our Canadian brethren. I think it's a good move for Husky in getting, as you said, better fields. I mean, we know these are coming around the corner.
Well, Synovus is going to be the operator. So it's really is this is a good deal for. I think this is a decent deal for Husky if you're, if you're LKI. One, this allows you to get some cash, and it allows you to have an exit strategy. If you look at the terms of the deal, he's going to be out of there within 5 years. Allows him to cash out, move on. His conglomerate take his cash. If you're Synovus, you do this deal because this allows you to cheaply get refining and midstream capacity that you think you might need to become now, because now you're the third largest operator in Canada.
Yep.
The question is, are they going to revert to growth for growth's sake? Well, now we have these pipes, we got to fill them. And so there's that interesting side to this whole game. So we'll see. Only time will tell. I am, again, the source I talked to liked the deal. He thought it was not decent.
We need to.
They do have a lot of debt. There's about net debt's like $12 billion.
Woo. We do need to look at the Canadian politics on this. I have not looked at that, and we know that Canadian politics and oil and gas is different. So I'll take my homework and see about the politics on it.
Yeah, they claim they're not going to be able to sell anything to meet their debt obligations. I'm skeptical, but we'll see. Yeah, I mean, I'm just trying to look through. I tried to take copious notes when I was talking to this guy because I was like, this is gold stuff. We're trying to loop him in on the show.
Was it during one of your baseball games?
Oh yeah, we were just texting all day.
Oh,
I literally sat on my butt all day, all weekend. Friday night, we got off. We cut the show Friday at like 2. I ordered Chipotle, sat on my butt, watched the World Series game starting at 6. Woke up on Saturday, watched college football all day.
I call all of your friends, and you don't answer me when there's a baseball game on, but yet you'll get, I call a friend of a friend off of a merger. Man.
Well, yeah, because they wanted to have this merger call at 11 a.m. on a Sunday. Only Canadian companies have a merger call 11 a.m. on a football Sunday. It should be criminal. But so I was like, I don't want to sit in on the deal. I need to just figure it out. And I, again, friend of a friend hooked it up. But text you, Stu. I just don't want to record podcasts during the game.
But you know what? It was already on the 360 news desk before we started chatter, right?
Oh, 100%. You're, Stu, as always, you are on it.
That's amazing. I'll pat
we miss anything on the day's show?
I think we covered it all. We got a busy week coming up.
We got a busy week, guys. Please check out our YouTube page. Subscribe. Do whatever makes the algorithm so nuts. It's really not that hard to watch our YouTube show for you guys. It's not that much I'm asking of you guys. It's really not. I just asking you to log on to our show, view it 10,000 times. I'm talking to you to go to oilandgas360.com, refresh the page about 6,000 times per day. Probably, do whatever you can to make the algorithm. It's not that much, guys. I'm only asking for like 4, 5, 6 hours of your whole day. It's not that much. It's not that much, guys. So just take that advice. Let's go ahead and cue the music and let you guys get out of here. Start your week. For Stuart Turley, I'm Michael Dan. Thank you for checking us out. 360 Digital Closing Bell Week Look Ahead podcast. We'll see you guys this afternoon for the Digital Ticker. See you guys.